Rohr here with an early, concise highlight on Tuesday, July 7th, 2015. It's currently 7:45 U.S. Central Time. We're coming to you once again a little bit later than usual because we wanted to get the latest update of what's happening with the Greece confrontation with its creditors. And there will be talks this evening on Tuesday that are pretty pivotal. And the sense of things is that the Greek government is starting to realize what a dire position they're actually in. And there could be a very modest concession offered by the creditors, and if the Greek government doesn't take it, we could get some real turmoil. And that's starting to show up in the markets just a bit. And at that point, we have to ask, what does all this mean to the markets? And you can see, as usual, the S&P 500 hourly chart on the left, 30-minute on the right, indicators below. And what we have is a market that opened pretty well yesterday as the market, opened poorly on the further Greek concerns spilling over from the weekend. But as we mentioned, it was down to 2035 overnight in electronic trading, a big sort of new low, and just below the 2040 to 37 key lows from the reactions back in March. And now we're sitting here with a market that by the time it opened even was back above 2040 to 37 by a good margin, and ranged up in the first couple hours all the way back up to the 2070 area. Well, after putting it under some pressure, the back down to below 2060 to 58, that's one of our key zones, market recovered to back above it, and in fact, it's trading this morning up back up at 2069 or so. So a pretty good show. However, it's already been up this morning into the 2075 to 78 area and is set back from it. So a lot of nervousness continuing on the European situation. And we would suspect at this point, having been above and below 2060 to 58, that can only be used as a short-term indication, especially in light of the upbreak that the market put in last Wednesday that held on Thursday, but it's been below it and back above it again right there at about 2062. So this kind of expands it to 2062 to 58. The key here, though, is that on the way down yesterday, the bears couldn't keep the market going down to reinstate the downside runaway below the lower runaway band on the 30 and 60-minute MACD. So that speaks of a market that's a little bit better underpinned, but would still have some pretty hefty resistance up in the 2075 to 78 to the down breakout at about 2079. And that pretty much does it for the short-term view of the S&P 500.